Hello, traders. It is Tuesday, the 10th of December, 2019. It is 8 a.m. Chicago time, 9 a.m. Eastern. This is episode number 1655. Thanks for joining me today. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The current um, the current market stance is actually mixed. It was set to allocate to safety pretty much the entire session, Globex session since yesterday. And with the recent news that there's a potential that the U.S. administration is likely to defer the um, tariff hikes, uh, that that took place at about 7:32, 8:32 Eastern, right after the productivity numbers came out at the bottom of the hour, and that pushed us right back into the prior day's range in the ES. And so the stance is mixed. Gold being a leader, gold up $7.20, trading at $1,472.10, up 0.5%. The Nasdaq is up pretty good. The Nasdaq's up 17 and a half points from yesterday's settlement, 0.21%. The DAX is off, down 83 and a half points, trading at 13,021, or down 0.63%. So, like I said, a mixed bag. The 10 years are up three big ticks, uh, and the bonds are up nine ticks. So, again, a mixed bag coming into today. Yesterday, I'll go over what was expected versus what we got here in the review segment, but yesterday certainly fulfilled what was expected auction-wise, but did so in a very interesting way. In terms of what is on deck for today, I mean, the overall theme is the same as it's been, so no sense in going over that. The theme is all about what's going to happen December 15th, and so that's where we stand. Um, in terms of what's ahead, like I said, we got non-farm productivity at the bottom of the hour. It's considered a low tier number. The news that came after it actually moved us around. Um, this afternoon at 4:30 Eastern, we get API crude oil, a stock change for December. The week ending December 6th. The prior is negative 3.72 million barrels. This evening, we get the Australian Westpac consumer confidence number and consumer confidence change at about 6:30 p.m. in case you're trading at that time. Nothing more to cover in that sense. Really, the news is driven by several things: the tariffs, the tariffs, the USMCA deal. There's a press conference scheduled by the House Speaker, I believe, at 10 Eastern. Um, and then the normal stuff, Brexit and whatever else. There really isn't all that much that's different today than yesterday, except that it's Tuesday, one of the more volatile days of the week. Here's what we expected yesterday. The primary scenario yesterday was expected to push back up towards the Friday close in the 3146 area. And then I expected a drop into 3135. This is the green line here. Expected a drop down 3135 for a pop into the close. All three early scenarios, scenario 4 is the opposite than scenario 3, but all three scenarios expected a lower low yesterday and a push into the gap. And I explained in yesterday's video, which you can still watch by going to my YouTube channel. I explained why it's a high probability test of the prior day's low, which we got. Now, the way we opened, it made it tough to take that short in the 46 area. Here's how the day looked yesterday. We open in an open auction, and then we break higher on what is an impulse rotation. So we end up pushing pretty good to the upside. And then so we expect some sort of a continuation. We get the continuation into 49.50. So now this is well beyond the point where I wanted to get short. The short was intended to be in this 46 area here. If you recall, I was looking for it to push up, rotate down, move down into 35, into 35, and then push back up into the close. That was scenario one. Here it is again from yesterday's video. Push up to 46, down to 35, and then bounce right back to the low end of Friday's range. And it ended up doing that. It pushed to 37, back to 42 and a quarter, and it just couldn't hold on, and it ended up pushing even lower and closing near lows. Yesterday was a normal variation day type and market profile speak, and the price action was supported by the delta, and it looked to me like we were primed, even though the point of control remained way up here. And look at that point of control, very bizarre looking profile. Yesterday's profile really showed that there was really very little in terms of consensus. But we did trade quite a bit in this area. Let me stretch this out. And you could see the volume there, 39,630 at the point of control. Above it, 37,600, then 34,000, and then it drops immediately to 9,000. How bizarre is that? Just very very high volume in a 1 point price range, and it looked to me like somebody was putting on a hedge or a position and was working the book in this area, and then it just drops off dramatically just above and below. So we end up stretching lower on the day, but no consensus whatsoever in terms of the balance or the success of this discovery. And because there was no consensus whatsoever, and we moved away from that high volume node and from the prior day's accepted value, my expectation is we are likely to continue lower overnight, at least tag that gap mid at 29 and a quarter, and then potentially fill all the way down to 31.20 and a quarter, which is the gap zone. Wasn't successful doing that. So we ended up getting what was expected per the trader bite. Not that that's what I'm aiming for. We ended up getting that, but the way we achieved that move down, I mean, once, if you didn't catch this big spurt up from the open auction at the open, then it was relatively difficult to catch the rotation down unless you were scalping short and adding. Relatively different to catch it because it didn't really have good counter rotations to provide us with a way to get in until the test of the opening price at 31.42 yesterday on the pullback with confluence in the IB low area. That was it for the day. We still have this gap zone beneath us. The gap zone started Friday. We filled it partially, but look at where we ended up overnight. Overnight, we ended up pushing to 31.16 and a quarter, and we have bounced a long ways from where we were. So what we have in the overnight is a candlestick that kind of looks like this. Okay, so this is the overnight has more and more meaning over time. It's something, the overnight session, I tended to mostly ignore. But I'm going to tell you that lately a lot of the action happens overnight, with the day session being just a grind. But what we have here is a clear rejection of lower prices. The key price to test below is this 3114 area, very, very big area to test out, for the market to test out, and it stopped at 116 and rotated back up. So today, I think that it is most likely, based on what's in front of us, it is most likely we will see sellers going on the defense. In other words, protecting their positions. Sellers are likely to get squeezed today. We'll see how that goes. But as I include, if you watch the composite over here, as I include yesterday's range, and I talked about this composite and how um, just incredibly jagged it is. And the reason I was looking for a test of that 45, 46 area is because of the high volume node here. But if you look at the composite and how it fills in, you could see that it traded quite a bit in that in the upper distribution of the composite and started forming something that looks a little bit like balance here, with the 2021 area being a key test area below. So overall, my view on the action yesterday is that it did have all the components of a market that is likely to spill back into this 2-day balance. This area right here is really clear. The structure overall in the ES is very clear to me. It's very clear to me what it's doing. It's giving us really clear areas for retests, 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 and so on. And it's just giving us very clear risk reward opportunities, in my opinion. So that's where we stand in terms of the overnight session. Here's what we got overnight. We finished, we finished down. The Asian session started to make an attempt at pushing higher, and then we push over with the European Open. The ZOO economic sentiment number out of Germany came in really strong. The expectation was 1, consensus 0.3, priors negative 2.1. The ZOO economic sentiment indicator for December came in at 10.7. 10.7, beating the heck out of every forecast, yet the DAX is way off. So overall, it's just, the overall, it's just kind of interesting because some negative numbers are good news. Some strong numbers may be bad news because of how um, the quantitative easing QE and the buying programs and things like that might be affected. So the market reopens here right around the balance of trade number out of the UK. Came in, balance of trade came in a little bit worse, but really it's sunk in an impulse. We got the continuation move, and then consolidated, and then we got the news out of China stating that they do not believe that the tariffs will take place on December 15th, which is this Sunday, and then the market rips right back up and pushes higher. Here's what it looked like on the order flow on CT Bookmap. We Here it is. We reopen, and then we fall pretty good right an hour after the European cash open on the indices. We fall pretty good. We get our continuation move. So there's the impulse, pullback, continuation, pullback, and then this is what looks like a correction, but this is actually also news. But look at the volume on this news versus the volume on this move over here. It really turned right back up, ripped right through some of the liquidity areas that are available, and we are trading with a high flag after that move now, which looks like it is primed. To me, it looks like it's primed to squeeze higher. So that's where we stand. A little bit of liquidity at 42, but that's because that's where the last high was. And then we have that standing liquidity over the last couple of days at 31.50, which is a major strike price. beneath us. The liquidity is at 31.14, which coincides with the MC point of control. A very important test area below for structure repair. And that's where I was expecting for us to go, and it turned around at 16, 16 and a quarter so far. So that's where we stand currently. We've shifted the overnight point of control up to 37 and a quarter. So we've shifted it up here, and we're holding steady. I would say if you're short, chances are we're likely to see a squeeze this morning to the upside. But again, I'm not here to color your bias or force you into what I think. I'm here to just go over the process that I follow and have followed for the last 15-ish years of steady trading. So that's where we stand. Let's take a look at what's expected for today in terms of scenarios. So we've looked at the order flow. I want to remind everyone, if you have not done so, I know I sound like a broken record. Please take the 15 or 30 seconds it takes to sign a petition at ft71.com/ capital letters MCL, M as in Monica, C as in Candy, L as in Latin, MCL, all caps. Please sign a petition if you have not. We're getting close to about 2,000 signatures. I am setting up a meeting with the CME to see if we can push this along a little bit by showing demand from consumers like you. So here's where we stand today in terms of the scenarios. The expectation this morning, I'm looking for an open auction at the extreme. I'm looking for a dip, and then I'm looking for a push up to squeeze the overnight high, back into 31.45, 46, pull back, consolidate for a while, and I'm looking for a push into that very high volume node that was left behind yesterday at 31.47, 48 or so. I'm looking for that to be tested and a potential for continuation. We do have a pretty blunt top right here, pretty blunt top right there as well. And the expectation is for a squeeze higher. Scenario 2 is going to be looking the opposite way because of how we set up. In this sense, I'm looking for scenario 2 to squeeze back up into the 31.42-ish area, and then to flow down for sellers to step in, prices to be high enough for sellers to step in and squeeze this down to 31.29, consolidate there, and then start to push somewhere in the middle and hold steady into the middle, which sets us up the next day for the return to 31.14, where the major balance is. So we would have a couple of island days here, holding steady in the middle. We have a gap above us, we have a gap below us, and it's likely to see some repair. That's scenario 2. I'll leave you with those two scenarios. Please come up with your own plan. Just understand the narrative that leads into these scenarios. It's much more important to understand the action that's taking place that leads into the scenarios rather than anything else. Rather than believing me because, been doing this a while or whatever. Don't want you to believe me. Question it. Go figure out what your key plans are for the day. And watch how the market responds, journal those, and over time you'll start to see a pattern or a path in your own trading. The goal here is not to copy anyone's trading. This is like fitting into a shoe. You kind of have to make it fit your feet. That's what trading is. There's no real kind of plan that can be bought that fits everyone. It's something you have to work out, and the best way to work that out, in my opinion, is to understand the auction first and foremost, and then layer on your moving averages and fibs and whatever else you want to use. But first, understand the auction. My trading is all auction based. Good luck.